For more on the numbers from Affirm, let's bring in Dan Dola from Mizuho. Dan, I'll give you the opportunity to react to the numbers. As Wilfred pointed out, there's really not much to dislike in the results if you are a bull here.
Yeah, no, I mean, the results were amazing. I mean, it surprised us on the upside. And I think what's especially interesting on the results is you're seeing the average order value, right? Like the bull case on Affirm is that the average order value or the average ticket value will come down and be more of a kind of everyday ticket items, like everyday things that people are buying and not just big things like Peloton. And you're seeing that trend continues to come down. That's a huge positive. And of course, the most interesting thing is the Amazon deal is not included in the guide. So I think that's why the stock is up so much, because people are just seeing that and they're saying, hey, there's massive upside to the guide if the Amazon deal turns out to be as strong as we expected it to be.
Yeah, and to your point, they give numbers excluding Peloton because of those big purchases so that you can see what it looks like there with and without it. But because the Amazon number is not incorporated here, how much potentially is that deal worth to Affirm in your calculation?
Yeah, I mean, so we've done a lot of work on this. Thanks for asking. So we've actually done a survey about 2 weeks ago, right when they announced it, of 200 Amazon customers. And even if you take a huge haircut to like everything that the survey results said, 50% said they're likely or very likely to use it, and 22% said that they're very likely to use it. So even if you haircut this like times 50, 50, 50, you're still getting 20 to 30% potential upside to gross merchandise volume, or GMV. And I think that's the massive upside of the deal. So the super conservative route still shows you 20 to 30% potential upside. And none of this is included in the guidance. And that's why you're seeing the stock up so much, in the aftermarket.
Are you fearful, Dan, that they're taking too much credit risk and we might be late cycle and they're not the only ones doing this? This trend is taking off and it could all be a bit of a sign of a top?
Yeah, it's a great question, Wilf. And you see that they've actually said today that it's a non-exclusive deal with Amazon. You saw, for example, PayPal bought a company in Japan just yesterday, and they actually Amazon lets Paydi, which is a company that PayPal bought, advertise or use their service, the buy now, pay later services on their website. So I think, look, I mean, there's still so much room to grow in buy now, pay later that I don't see any risk of sort of any emerging credit crisis or credit risk in the near term. And the one thing, and we've talked about this before, and I think that's the most important thing, the algorithms that companies like Affirm have are way better than what we're used to when it comes to sort of FICO scores. So the way they underwrite the people that take the loans, I think, is the edge. It's those algorithms, it's understanding the customers, it's knowing what they're doing. That's what helps you reduce the risk. And that's what people don't understand. It's the algorithms that help avoid a credit crisis.
And so, Dan, there are a lot of competitors right now cropping up, or those that already exist in the buy now, pay later space. And I will admit, when these companies first came around, I thought, isn't this layaway? Is this really a big market? But clearly, I wasn't right. There is a big market for it. In your calculations, what is the opportunity for buy now, pay later? I mean, how many transactions are being done this way, and how many could be done this way that all of these competitors are trying to get a piece of?
Right. So obviously this could be huge. I mean, the best way to look at it, and we've done work on this, you look at Australia. And Australia is kind of the market where buy now, pay later started for whatever reason. And that's a very similar market to ours because, language and culture, et cetera. So it's a very good market to look at for comparison. In Australia, you're seeing double-digit penetration, I think, already of some of those buy now, pay later firms. Afterpay, I think there's a company called, ZipPay, Sezzle. There's a lot of companies there. Afterpay is obviously the biggest one. And, in that market, it's taking a bite into the credit volumes. And sort of the credit volumes are starting to kind of kink downwards. And that's because of buy now, pay later. It's not because of COVID. So I think, at least double-digit penetration of credit volumes over time. You're talking about, trillions of dollars of credit volume. So whatever penetration it is, it's still a massive growth opportunity for buy now, pay later, just because the TAM is so big.